And I know that you are the finance guru, Dan Geltrude, but do you have a crystal ball? Do you have an idea of what may happen next with the stock market? 20,000, I don't think anyone a few years ago would have any idea it would get to this point. But what's going to happen, in your opinion, with the stock market?
You know, King, if I really knew what was going to happen with the markets, no offense, I wouldn't be here talking to you right now. Right? I'd certainly be somewhere else with that kind of predictability. But look, if you're in the market or you're even just getting into the market, I would say to you, look, stay the course. That over time, the market has proven itself. If you've stayed the course, yes, there's bull runs, there's bear runs, and we have these things up and down. It's cyclical. The things we've already talked about, we know that. So you have to have a plan, and you have to stay in. And what you have is sometimes when the market dips, people panic. They pull their investments out. They say, I can't take this. Well, you know what? When that happens, that's the opposite of the buy low, sell high. They end up buying high, which if you're getting into the market now may very well be the case. Then you start to have a market adjustment and people say, I'm out of here. So to some extent, sometimes you have to get in the market and you almost have to let it go and maybe not pay attention so much. If you have a plan, you let the plan go. If you have an advisor, you follow that advisor's advice. It's really, really hard to give blanket advice to an audience like we're addressing right now, King, but I still believe overall, if you have a plan and you believe in the plan, you stay the course. And I said earlier, timing is everything. So sometimes you have to apply common sense to the market, to your market strategy in real time. So if you're nearing retirement, if you know you're going to be needing funds for college for your children and so forth, you need to start to plan in advance. And in those cases, start to move funds into more conservative positions. Again, the horror stories we heard back in 2008 was people were nearing retirement and their positions perhaps were still in some aggressive stocks or investments. Then all of a sudden we have, this, quite frankly, crash in the market. And now the timing really is at a disadvantage to them. So again, we don't know how the market is going to react, and it's somewhat impossible to predict. However, you can apply some common sense to say, you know what, I'm going to be needing some of this money in the next couple of years. Perhaps it's time to alter my plan, diversify, become a lot more conservative. And in other words, that's all part of the game plan. And most of all, my advice would be to anybody who's in the stock market is don't get emotional about stocks. And maybe I'm stealing that line from Wall Street, right, with Charlie Sheen and Michael Douglas. Never become emotional about stocks. I think there was a lot of wisdom in that statement.
What a great reaction we've had to your segment, The Finance Guru, Dan Geltrude, with Dollars and Cents every Saturday morning at 7:45 a.m. We look forward to next Saturday morning segment. And check out Dan on his Twitter handle, Dan Finance Guru, also Geltrude.com. Great YouTube page. You can also see some of Dan's segments on my website, KingArthurWIBG.com. Dan, have a great day. Thanks for all of your advice and input and informing our audience of what's going on.
Thank you, King.
Thank you so much.